Getting to 1 million just doesn't make sense. Why does it feel like no matter how much you save or invest, real wealth is just out of reach? Like your girlfriend needing something from the top kitchen shelf. Is there a hidden key that separates millionaires from everyone else? There is, and it starts with your first $100,000. In this eye-opening video, we'll reveal why the first 6 figures is the hardest financial milestone you'll ever hit, and why getting to $1 million becomes almost effortless afterward. Let's be honest, you're here because you're not like your brother, your mom's favorite son, Mr. Golden Boy. You're here because you're actually ready to break through the toughest financial barrier and accelerate your path to financial freedom. And we're here to show you how. Just stay with us until the end of this video. Hitting your first 100K feels like trying to push a boulder uphill, blindfolded, in the rain, with a sprained ankle. No matter how hard you save, invest, or budget, it just doesn't seem to grow fast enough. And honestly, that's because it doesn't. The beginning of wealth building is painfully slow, and most people give up before they see any real progress. Think about it. When you only have a few $1,000s saved, even a solid 8% return in the stock market barely makes a dent. You invest $5K? Congrats! You just made $400 in a year! Meanwhile, some millionaire just made your entire salary in their sleep. That's because compounding, the magical force that grows wealth, doesn't really kick in until you have a solid base. So in the beginning, it feels like you're doing everything for a tiny reward. You save aggressively, invest wisely, and then you check your account and... yay! You make $27! Amazing! And here's where most people get discouraged. They think, this isn't working. I'm barely making progress. So they stop. They cash out. They tell themselves investing doesn't work. But here's what they don't realize. Everybody struggles with the first 100K. Even self-made millionaires. Even Warren Buffett. Buffett made 99% of his fortune after turning 50. Why? Because once you pass that early, painful stage, compounding takes over. When you go from 10K to 20K, it's all your effort. But when you go from 100K to 200K, your money starts pulling its own weight. So if you're in that frustrating stage where you're doing all the right things but your bank account still looks broke, do not quit. Your breakthrough is coming. And next, I'm going to show you the path for getting there. The first 100K is brutal, but you have to do anything necessary to get there. Pick up extra hours, start a side business, or even sell feet pics. Then start saving. Every dollar you save might feel like a drop in an ocean, and your investment returns look like pocket change. But what happens when you keep doing it? In a few years, you save up to amounts that actually matter. This is where compound interest stops being a fancy finance term and starts feeling like magic. So what is compound interest? Compound interest is when your money earns interest, and then that interest also earns interest. Essentially, it's what happens when your money works harder than you do. Let me give you a simple analogy to explain it. Imagine pushing a small snowball down a hill. At first, it barely picks up snow, rolling slowly with no noticeable change. But as it keeps rolling, it grows bigger, faster, and suddenly it's an unstoppable force. That's exactly how wealth building works. Your first investments grow a little. Then those gains get reinvested and start growing too. Before you know it, your money is doubling in less and less time. Here's where things get really fun. Let's say you've managed to save and invest $100,000, and it grows at a reasonable 8% per year. That's $8,000 in a year, without lifting a finger. The next year, you're not just earning on your original $100,000, you're earning on the extra $8K too. The cycle repeats, and suddenly, your money is growing faster than you can save. Now imagine this at 500K or a million. At that point, a 8% return means nearly 6 figures in a year. That's a full-time salary just from your investments sitting there. If you take a look at this chart, you'll see exactly how powerful compound interest can be. Let's say you start with $10,000 and contribute another $10,000 at the end of each year while earning a steady 8% return. In the first year, there's not much happening, just a $800 gain from interest. But by the end of year 2, your balance has already jumped to $22,464. Now check out year 3. Your total has climbed to $35,061 thanks to another year of growth and a fresh contribution. By year 5, you're sitting at $63,359. At this stage, the growth still seems steady, but it's about to accelerate. Let's take a look at year 7. You're officially on the heels of the $100,000 mark. That's right, it took just over 7 years to reach 6 figures. But here's where things get interesting. If you move your eyes down to year 12, you'll see the balance has nearly doubled again, hitting $204,953. This is where compound interest really starts flexing its muscles. It took 7 years to go from $0 to $100,000. But getting from $100,000 to $200,000 only took about 5 years. And from $200,000 to $300,000? A little over 4 years. The timeline keeps shrinking and the numbers keep growing. Now fast forward to year 20. Look at this! Your investment has exploded to nearly $500,000. Just 8 years later, in year 28, you've officially crossed the $1 million mark. The chart makes it crystal clear. The first $100,000 is the hardest, but once you get there, your money starts working at a pace that's almost unbelievable. If you study this closely, you'll notice something even crazier. By the time you hit $100,000, you're already 1/4 of the way to $1 million. Not because of additional contributions, but because of the power of compounding. The secret is patience. Most people give up before they ever reach the point where their money starts multiplying on its own. So if you're looking at this chart and thinking, this growth seems slow at first, that's exactly the point. Wealth doesn't appear overnight, it builds. But once the compounding kicks in, it snowballs faster than you'd expect. This is why the wealthy keep getting wealthier. They let time and compound interest do the heavy lifting while everyone else gets impatient and pulls out too early. Is why the rich seem to get richer effortlessly. Like they've got a magic genie who grants them financial wishes. But really it's just compound interest and a lot of patience, something most of us are still working on. Once their investments reach a certain size, their money starts making more money than they could ever earn from a job. Meanwhile, people still grinding to reach that first 100K feel like they're using dial-up internet, barely moving. But here's the thing. Every wealthy person you admire went through that same slow grind in the beginning. The difference is, they stuck it out long enough to reach the tipping point. The shift from, I need to work to make money, to, my money makes money for me, is where the game changes. At first, it's hard to see the impact because you're used to thinking in terms of active income, trading time for money. But the moment you check your investments and see that your portfolio just pulled in more than your last paycheck, that's the moment you realize financial freedom isn't some distant dream. Congrats. You made it, kid. And it's not just about the numbers. The moment you start seeing progress, something shifts in your mindset. Saving and investing stop feeling like sacrifices, and they start feeling like opportunities. You stop thinking of money as something you have to constantly work for, and instead, you start seeing it as a tool that works for you. This shift isn't just about having money. It's about changing how you think about money. That's the real secret to accelerating your financial progress. Most people view money as something to spend, even mama's golden boy. The wealthy view money as something to grow. The moment you start treating your dollars like tiny soldiers on the front line, rather than just pieces of paper to trade for stuff, you're on the fast track to financial freedom and winning this battle with money. You You must prioritize investing early. Too many people treat investing as something they'll do when they have more money. But that's like waiting until you're in shape to start going to the gym. You don't invest because you have extra money. You invest so you'll have extra money. Even if it's just $50 a month to start. The habit is more important than the amount. So if you feel like your investments are growing too slowly right now, remember, that's exactly how it's supposed to feel. The snowball effect doesn't start big, it builds over time. But once it picks up speed, there's no stopping it. Stick with it, and eventually the returns will outwork you. Okay, let's get one thing straight. If you're just sitting there waiting for your paycheck to get you to $100,000, you might as well be waiting for a unicorn to deliver it in a gold-plated briefcase. It's not happening anytime soon. The real magic happens when you start creating multiple streams of income. You know, side hustles, career moves, maybe even selling your grandma's vintage collection of Beanie Babies. No judgment, they're worth something. Seriously though, think about this. Adding an extra $1,000 a month from a side hustle? That's $12,000 a year. But here's the thing, it's not just about making money, it's about keeping it. That luxury car you're eyeing? Yeah, it looks great, but it also looks like it's draining your wallet every month. If you're trying to get to $100K faster, start thinking like the wealthy. They buy assets, not liabilities. Every dollar you don't spend on things that make you look cool in front of your friends is another dollar you can put to work for you. Your future self will thank you. Remember what Benjamin Franklin taught. A penny saved is a penny earned. If you respect his words, then maybe he'll come live in your wallet. Now I hope that makes sense.